Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, the 5th of December, 2025. The past 48 hours have been a masterclass in institutional normalization and selective caution. Bitcoin is trading at $93,051, up 0.11% on the day, but more importantly, sitting just shy of all-time highs after adding roughly $200 billion in market cap in the last 36 hours alone. Listen for the summary at the end, but for now, let's leap in. Bitcoin, $93,051. The legitimacy momentum is now moving at full speed. Vanguard, the 11 trillion asset manager that boycotted crypto for a decade, has officially opened Bitcoin ETF trading to its 50 million clients, effective this week. Charles Schwab, 12 trillion assets under management, followed with an announcement that direct BTC and ETH trading arrives for its clients in 2026. Bank of America is formally recommending a 1 to 4% allocation to wealth management clients. And BlackRock CEO Larry Fink publicly admitted he was wrong about Bitcoin. A stunning 180 from one of the most powerful voices in traditional finance. On the cautionary side, MicroStrategy's monthly Bitcoin accumulation collapsed from a peak of 134,000 BTC to just 9,100 BTC in November, the slowest pace in years. The company is building a $1.44 billion in cash reserves and has repeatedly flagged that a sustained move below 1 times net asset value could force sales. Tom Lee of Fundstrat reiterated a possible drawdown to $55,000 if sentiment cracks for Bitcoin. Exchange supply continues grinding lower, now approaching levels not seen since 2013. A weekly close above 94,000 to 95,000 remains the key macro flip level. Ethereum, $3,179 plus 3.16%. The Fusaka upgrade went live this week, delivering 8 times higher data throughput and 40 to 60% lower fees. ETH ETFs flipped hard, 140 million of inflows in the first 3 days of December after months of bleeding. Over 3 to 4 billion in short positions are at risk of liquidation above 3,500. Charles Schwab's 2026 ETH trading inclusion adds another layer of blue chip validation. Broader institutional buying did drop 81% month over month in December, and BlackRock was a net seller of 88.7 million this week, while Fidelity and Grayscale scooped up the other side. Price has held firm. 3,500 is the line in the sand for a fast move towards 4,000. Solana is trading at $142.95, up 0.88% over the past 48 hours. It continues to see strong institutional interest compared to its other assets outside Bitcoin. Franklin Templeton's spot ETF officially began trading on the New York Stock Exchange today. Combined SOL ETF assets under management has surged 239% in 3 months to over $690 million US. Circle minted 500 million USDC on Solana in under an hour this week, and another 1.5 billion in stablecoins landed on the chain in the past 7 days alone. Solana still leads DEX volume and on-chain app revenue by a wide margin. Support at $130 held perfectly. $150 is the next major hurdle en route to 180 plus. In summary, we are watching two markets right now. One driven by loss aversion, where MicroStrategy slows the buying momentum and Trump tokens crash 75% in classic cascade fashion. The other driven by structural adoption, Vanguard, Schwab, Bank of America, and BlackRock itself giving conservative capital the green light they've waited a decade for. History rhymes. Historically, extreme fear readings, shrinking exchange supply, and accelerating institutional infrastructure have often coincided with major market shifts in previous cycles. Many analysts note that the environment for large-scale capital participation appears to be evolving. That concludes your market update for the 5th of December 2025. Remain calm and stay informed. Thank you for listening to the Leap Podcast.